uptrend, so you want to trade with the trend. Next, you identify the key level here. The moving average then lined up with your key level and is where the trade opportunity presented itself. The trend line also perfectly crosses with your key level and moving average. With the fib tool, click at the swing low here, drag it to the recent swing high. The 61.8% fib area lines up perfectly. This then gave you an area of confluence, making this a high quality long trade opportunity. As price pulled back to the area, you had a perfect long wick candle right at the area of confluence, which shows a reaction to the level. Now, this leads us perfectly into our next topic. So after you had the candlestick react to your area of confluence, you don't enter a trade long instantly and blindly. You need the trend change confirmation pattern. So let's get right into it. Now, before we continue, if you're enjoying this video and want us to release more videos more often, please hit the thumbs up button. And in the comments below, tell us what videos you want us to cover next and any questions you have. Also, go give our Instagram page a follow. This is where the trade opportunity long occurred. You first identified a clear uptrend, so you want to trade with the trend. Next, you had your key level of resistance turn to support. Next, you had heavy bullish momentum because price broke the key level that previously held multiple times. Then, the moving average crossed with your key level and where the trade opportunity long presented itself. With the fib tool, swing low to swing high, and you have the 50% to 61.8% fib zone that lines up with your trade opportunity area. This then gave you an area of confluence. When price pulled back to this area, you had a long wick candle right at the level, which shows a reaction to the area of confluence. At this point, you still don't jump into a long trade instantly. This then leads us to the next step required, which is the trend change confirmation pattern. Now, why exactly do you need a trend change confirmation pattern? What we are going to explain right now is very important to understand. Your big picture trend is indeed an uptrend and bullish, but your immediate trend is a downtrend and bearish, meaning there is a conflict in your directional bias. Or to be more specific, the larger trend is telling you to trade long, while the short-term trend is telling you to trade short. The two trends are telling you to trade in two different directions. So what can happen is price can stall at your area of confluence, react to it, and then break through and continue down and trigger a larger trend change. This happens when not enough buyers step in at the area of confluence. Don't forget that this here is a current moving downtrend, which can continue on in its directional path. So how do we get around this problem? You need this short-term downtrend to turn from bearish to bullish so that this short-term trend matches the direction of the big picture trend. Now to do this, you need to look for a trend change pattern inside of this downtrend that shows a change from a downtrend to an uptrend or from bearish to bullish. Or to be more specific, to signal that the short-term downtrend is over and that the larger uptrend can continue. Or to be even more specific, to confirm that enough buyers actually stepped in at the area of confluence. Now there are many trend change confirmation patterns we use, but to keep it simple for now, what you do is you place a trend line onto the immediate trend like this. And if you have a trend line break, this signals a trend change from a downtrend to an uptrend, a change from bearish to bullish, and shows that the short-term downtrend is over and that the larger uptrend can continue. If price doesn't break the trend line and continues down, there's no trade because not enough buyers stepped in at the area and it's clear the sellers are in control. So after you had that trend change confirmation breakout, all things are a go. This is when you need the final step of the formula, which is to go to the lower intraday timeframes and use our key entry and exit strategy and entry tool. So this leads us to our next topic. What if you cannot place a trend line onto the immediate trend? This is why you need to know how to use multi-timeframes. Knowing how to use multi-timeframes is what separates the amateurs from the pros. So before we continue, every day we get asked the same two questions. How do we design and edit our YouTube videos? How did we grow our YouTube channel so fast? If you want to learn how to do this all yourself, step by step, head on over to our website at wisetrade.com. The link is also in the description below. So let's start from the top again, except now we'll be combining the usage of multi-timeframes. This is the 8-hour time frame, and this is where the trade opportunity long occurred. First, you identified the key level here. Next, you had heavy bullish momentum because price broke the key level that previously held multiple times. Then, the moving average crossed, which is where the trade opportunity long presented itself. With the fib tool, swing low to swing high, and the fib zone lines up. This then gave you your area of confluence. When price pulled back to the area, you had a long wick candle with the wick sticking out, showing a reaction to the area of confluence. So in the last section, what we would do is, we would put a trend line onto the immediate trend and wait for a break to occur before looking for a trade entry long. Now the issue with doing this on the current trend is that price movement is too tight, meaning you cannot clearly see the swings of price and cannot see the swing highs and swing lows. So if you attempted to place a trend line up close and tight to the trend like this, you will often be faked out by false breakouts. This is a very important point. Price movement won't always be suitable for you to place a trend line, hence why you need to know all the trend change patterns, which we will cover in a future video. But now for this particular case, how do we get around this problem of not being able to place a trend line? And here's what you need to do. We need to use a lower time frame where we can look inside of this downtrend and be able to see the swings and price movement of this trend, and then be able to look for price action that shows a trend change from a downtrend to an uptrend to confirm that the downtrend is over and that the larger uptrend can continue. So let's pull up the lower time frame, specifically the 4-hour time frame, and put it beside this one. So the chart on the left is the 8-hour time frame we just looked at, meaning every candlestick represents 8 hours of time. The chart on the right is the same asset, but is the 1-hour time frame, meaning every candlestick represents 1 hour of time. Here's the key level on the 8-hour time frame, and here is the same key level on the 1 hour. Here's the 8-hour pullback downtrend, where we tried to place the trend line but couldn't. And here is the same pullback downtrend on the 1-hour time frame. Here is the area of confluence we previously identified and where the long trade opportunity occurred. And here is the same area on the 1-hour time frame. Now on the 8-hour time frame we previously looked at, notice how you couldn't see the swings of price, whereas on the 1-hour time frame, you can clearly see the swing highs and swing lows and movements of price. Again, we are looking on the 1-hour time frame in this downtrend for price action that signals a trend change from a downtrend to an uptrend. And here it is. On the 1-hour time frame, we can easily place a trend line connecting these swing highs because again, on this time frame, we can actually see the swing highs and swing lows. And once you had the trend line break, this was your trend change confirmation. The 1-hour time frame turned from bearish to bullish and matches the 8-hour time frame big picture bullish directional bias. So one more point as to why a trend change confirmation pattern and using multi-time frames is important. You could have easily had a long wick candle form and stall at the area of confluence on the 8-hour time frame here. But then on the lower time frame, price could have done this instead. Run, pull back, run, pull back. And instead of breaking out and through the trend line, started another run and continued on, triggering a larger trend change. So after you had your trend change confirmation breakout, this is when you need the final step of the formula, which is to go to the lower intraday timeframes and use our key entry and exit strategy and entry tool. So now, the part you've all been waiting for, the massive Bitcoin and crypto trade our members and us took using this exact strategy. This trade used everything we have shown you in this video, and also some more advanced concepts. So let's break this down step by step. This is the Bitcoin monthly time frame, meaning every candlestick represents 1 month of time. As we previously discussed, things you find on the higher time frames, such as the monthly and weekly, hold more weight. This is a very, very key point. Because the monthly is slower moving and things take longer to form, as a result, it gives you a very accurate depiction of where the market is headed and of what the market is actually doing. Now, you don't trade on the monthly time frame. You only use it as guidance for trade entries you take on the lower time frames. So there were 3 high-quality traits that gave us our clear bullish directional bias, even before we brought in other timeframes. First,
side hustles suck and you don't even love it anyway, okay? There, I said it for you. Now, if you're the 1 out of 100 people that truly love their side hustle, you could just skip this ad. But if you're truly just doing it for the extra money, can I ask you a question? Is it really worth it? Because look, let's face it, you don't have the desire, time, or energy to become an expert in e-commerce, affiliate marketing, day trading, or any of the other time-sucking opportunities that are out there that people can utilize to hit their financial goals, right? I have good news though, okay? What if it was possible to cash flow like you were sitting on a few mil right now? What if it only took a tiny portion of what a typical retirement balance would need to look like for you to cash flow your entire lifestyle right now, right? I'm talking about the ability to retire young. And I mean, let's face it, okay? Making it big with any kind of a side hustle, it takes a lot of work. And that's because these opportunities aren't investments, no. And what they are practically a full-time gig, right? Or at least a part-time second job. And look, here's the truth, okay? No investment is truly passive, but the best ones are as passive as possible. Okay, now for some good news. You've likely heard of AI. I mean, I think at this point, everybody's talking about it and the opportunity behind it. But have you heard about smart contract cash flow? You probably didn't, right? And it's true. Almost nobody.
Key monthly resistance level turned to support. Price then broke through this very key monthly resistance level that held 2 times. Next, price was in a clear downtrend before price made a higher high, which shows a clear trend change pattern and a clear moving uptrend. Even before we go down in time frames, everything we just covered tells you one simple thing: look for long trades. Now, this is a very important point. This is what price action is in a nutshell. We were reacting to what we saw the market doing, not guessing where the market would go next. This wasn't even on our radar until we saw the breakout momentum and heavy bullish presence that entered the market, which is then when it entered our watch list. As retail traders, you don't have the power to move the market. You are just reacting to what you see and entering trades in the direction of where the herd and crowd is headed. That's it. So let's pull up the weekly time frame so that we can see this in more detail. So the chart on the left is the Bitcoin monthly time frame we just looked at, and the chart on the right is the Bitcoin weekly time frame, meaning each candlestick represents 1 week of time. This was the monthly key level, and this is the same key level but on the weekly time frame. Here was where the breakout occurred on the monthly. Here's the same breakout area on the weekly. So let's go through the high quality trades on the weekly time frame, full screen. This is where the trade opportunity long occurred, which was at the key monthly level and now also the key weekly level. Again, things you find on the higher time frames hold more weight. So first, you had your very key weekly level. Next, this level that held 3 times previously finally broke through, which shows how much bullish momentum and buying presence had entered the market. Next, we are also in a clear moving uptrend through the higher highs and higher lows. We then had the moving average that crossed perfectly with the key level and is where the trade opportunity long presented itself. Next, with the fib tool, click at the swing low, drag it to the swing high. And notice how the 61.8% fib area also lines up with our trade opportunity. This then gave you your area of confluence. Remember that this is a level that is visible on the monthly and weekly, meaning there's a very high chance that price will react to the level. When price finally hit the area of confluence, you had candles with the wicks sticking out right at the level, which shows a reaction to the area of confluence. So as we previously discussed, we would usually try to place a trend line onto the immediate trend and wait for a break to confirm the trend change. Now the issue with trying to put a trend line on this current trend is that price movement is too tight, and we cannot clearly see the swing highs and lows. So if we were to put a trend line up close and tight like this, it'll result in fake and false breakouts. So again, to get around this problem, we need to use a lower time frame to look inside of this pullback where we can actually see the swing highs and lows of price, and then be able to look for price action that shows a trend change from a downtrend to an uptrend. So let's pull up the daily time frame and put it beside this one. The chart on the left is the Bitcoin weekly time frame we just looked at, and the chart on the right is the Bitcoin daily time frame. Here's the very key monthly and weekly level, and here is the same key level on the daily. Here is the pullback area on the weekly. Here's the same pullback area on the daily. Here is the weekly time frame area of confluence. Here's the same area of confluence on the daily. Now on the weekly time frame, notice how you couldn't see the swings of price, whereas on the daily time frame, you can clearly see the swing highs and lows and movements of price. So again, we are looking for price action that signals a trend change from a downtrend to an uptrend, and we got this trend change pattern in two forms. The first is the trend line break. On the daily time frame, we can easily place a trend line onto the immediate trend like this, and then once you had that trend line break, this was your first trend change confirmation. Now secondly, you also had a higher high, which is another trend change pattern. Run, pullback, run, pullback, run. But notice how this run here failed to make a lower low, but instead made a same low, or a double bottom, which shows a loss of momentum. And this all occurred at the weekly and monthly level. Clear lower highs before price finally broke through the trend line and made a higher high, which is again another trend change pattern. So after you had your trend change confirmation breakout, all things are a go. This is again when you need the final step of the formula, which is to go to the lower intraday timeframes and use our key entry and exit strategy and entry tool. This was a very high quality A+ trade, almost picture perfect. Now there were many different ways our members entered on this trade, some directly through Bitcoin as we showed, and some through positively correlated assets. So now, what exactly is the entry and exit strategy and entry tool? Meaning exactly where to enter trades, exactly where to exit, exactly where to put your stop loss, exactly where to put your profit target, how to manage an open winning position to maximize profits and minimize risk, and all the other high quality traits to look for within a trade opportunity. And a ton of other content that won't be available on our channel as it is too dense. If you want to learn this all, head on over to our website at wisetrade.com.